from the Caribbean as well. Hi guys, welcome back to the channel. If you are new, my name is Nigel and this is the Caribbean Culture and Insights channel where we talk about a number of things regarding the Caribbean culture and its communities. Today though, we're talking about taxes. I want to look at that for a bit. That's because there have been situations out there where people who recently migrated to the United States, and even those that have been here for a while, got taken advantage of when it comes to their tax return because they have little to no knowledge of the tax systems. So they rely on someone to do their tax return and having to pay lots of money, $200, $300, $400, $500 for simple tax return, despite that they're single. We even have situations where somebody who would normally get back $400 or $500, sometime $1,100, somewhere along that line, they're told that, hey, I will let you get back a lot more money, $4,000, $5,000, $6,000, $7,000. And to do that, the tax preparer then tack on stuff to the return to get you that kind of money, stuff that you don't even understand what type of information they put in there, but suddenly, have a $6,000 return staring at you. Of course, if you're new and you're hearing that kind of money, you're not going to say no. You're just, okay, I'll go along with that. And then later on, the IRS then audit you. You're the one that they're coming after, not the tax preparer, right? They come and they ask for information to back up or to justify or to prove that what got put on the tax return are legitimately tax deduction. And when you can't come up with these type of information, then rather than you having a $6,000 return, have a $6,000 debt that you have to pay back, plus interest, plus penalties. And sometimes they wait until year 2 or year 3 before they come after you, and now everything is piled up and it becomes a nightmare and a headache to deal with. Look at what happened to a friend of mine recently. She migrated from Jamaica in 2014. When she got here, she was pregnant, couldn't even work, new to the system, don't understand what was going on, don't understand the tax system. Her husband at the time had a tax preparation business, so he did their taxes and added her on as a joint tax return. Didn't tell her anything, didn't ask for her permission, didn't share any kind of information or discuss anything with her. It turns out that the tax return caused them to owe money from the business. She found out about it and asked him about it. He says, don't worry about it, I'll take care of it. Later on, she got a letter from the IRS stating that her portion of the debt is $14,000, something she didn't know about, wasn't here when the debt was created, didn't understand what was going on. And what do we know, 2022, 7 years later, she's still struggling and fighting with that debt with the IRS. I'm assisting her with the situation, but no one should ever have to encounter or go through that type of stuff because you're new or because you don't have, knowledge on how taxes are done. So I'm doing this video today to help you understand the basic calculation that goes into a tax return so that you can understand how to review your own tax return when somebody do it for you. Before we jump in, don't forget to like, comments, and share, and hit the red button at the bottom to subscribe so that when I release new videos, you will be in the know, and just click the notification bell as well so that you're notified. Without further ado, let's jump in to learn some things about taxes. Hi guys, welcome back. All right, so we're discussing taxes, and in order to understand the basic tax return calculations, in an effort to understand how to review your tax return, what we're going to do, we're going to walk through the how things flow when you first get your job. What that means is if you're new to the United States and are just coming into um, this whole idea of taxes, like we said before, trying to understand the W-4 form, what it is, how to use it, how to fill it out. Um, we're going to take it from that perspective. Okay? So let's first start looking what the W-4 is and understand how it's used. And then we're going to look at an example. So on my screen here is a little blurb about what it is. The W-4 form is used for tax purposes, and it is filled out by an employee when they first began their employment, right? The form provides the employer with information about your tax withholding from your paycheck. So basically giving them information and how much money I should take out of your paycheck for taxes. And then when we come down here in this line, hope you can see my mouse. I put a little note here that said it is important for your employer to collect the W-4 form from you the employee so that they can deduct the appropriate amount of taxes from the paycheck. And what that means, the information that you're providing on the form is going to help them to determine how much money to take out of your paycheck. And that's based on what's going on with you. Do you have a dependent, a child, that sort of thing. And so down here I have I think I should put here what you put on the W-4 form is information such as how many dependents you have, any tax credits, and their social security number. And I said here that it is important to be accurate with this information as it will determine how much taxes a person owes. So if you have a child as a dependent and you have things like daycare expenses and so forth, of course you're going to owe less taxes. If you don't have a child, you're totally single, and you don't have a care in the world, you're going to owe more taxes. That's why the information is important. And then when you put the child in, you need things like social security number and so on to make sure that the child is properly identified. Then at the bottom here, I have always remember to update the W-4 form as needed if there are any major life changes, such as getting married, divorced, or having a baby. The form should be changed to reflect these type of stuff. Okay, so that's kind of the nutshell of the W-4. So let's go take a look at it, see what it looks like. This is the W-4. Now to find it on the IRS website, I have it up already, but let me show you how to get to it. You go to the IRS website, get that in, and if you go to forms and instruction, it's right there. You can get to it that way, or if you don't want to do it that way, then in the search bar, search field, you just type W-4, enter, and it comes up. Click on it, and now you have it. Fill it out, and then you can download it. Okay, then you hand it into your job. All right. What else? All right. So let's close this tab and use this one. All right. So we're gonna fill this out. Now, when you get the job, if they didn't give you a W-4 form, some jobs just have a HR portal. You just go in there, you don't fill out a form. What you do, you enter what they call an election. That's the number of dependent. If you don't have a dependent because you don't have any children, you're single, no wives, you just make sure that your information is correct and you add 0 or you don't do anything. And that portal looks like this. So this is what the portal. So this is what it looks like. When you log into the HR portal, different company portal is different. But so this is just an example. So you should see something looking like this that says withholding elections, have your name. You want to make sure that everything here is correct. And then down here, notice it says federal election. So you have the date you start and your filing status. Let me grab the one that represent what we're looking at here. There we go. So I have a couple of them that I wanted to use. Where's my single? Okay, single. So this would be the one. Actually, where's my single with the 0? Okay, single 0. So this is the one that you, for this example, use because you're single and you don't have a chick or a child, as I would say. So you put 0. If you don't put anything here, HR would assume that it means 0. What this does, it allows the HR department to take the maximum amount of taxes out of your paycheck. Okay, so we're going to go to manual version though, so that you can understand um, how we come up with the calculations for the tax return. So here's the manual version. Get the job, you're handed a W-4. So what you do, you put in your first name, enter your last name, come down here, you put in your address, 12 New Street. All right, come down here, put in your city, put my city, McLean. Next, you put in your social security number, 4, 5, 6, 7, 8, 1, 2, 3, that, so take off 1 is supposed to be 93. All right, social security number. Then you click off your filing status. So I'm single. There you go. Since I don't have a chick or a child, as I scroll down, I don't have to do anything else. I am done. All I have to do is to scroll down, sign the form and date it, and I give that to the HR department. I'm done, guys. It is that simple. Let me bring my, I'm gonna drag my video out of the way here so everything is clearly visible to you. Okay, so I'm done. So I hand that to the HR department. They're going to use it now to figure out how much money comes out of my paycheck. All right, so let's take a look now on how HR come up with how much money to get out of your paycheck, or if it's not HR, some company that's handling the payroll. There are two methods. I would imagine smaller company use like a manual method, which is a form that they use as guide to do the calculations. And then larger company would use a payroll software, or you'll hear them refer to it as a payroll system. So we're going to use the payroll system to do the calculation, but I just wanted to show you the manual way, so you have an idea what goes on behind the scene. You won't have to do any of this, nor do you even need to understand it other than how the calculation works. So here we go. I am going to bring up this form. So a smaller company would use a form like this. It's called wage bracket method, table for manual payroll systems with forms W-4. And this is like a 2020 or later version. So they would come in here. I have a version of this in a spreadsheet that I can show you better. But this is what the form looks like. And once they plug in the numbers, your salary divided by the 26 weeks, then they would come down to this table and use this table to figure out what the tax rate is. They just simply look up what your income is, and they would go across and to the single section and see how much the table says your taxes is supposed to be, and then that's what they would take out of your paycheck. So that's the manual version. Now let's go look at the software version. So to look at the software version, there's a website that I know of that I use all the time. It's called Dinkytown Calculator. Different companies' payroll system look different, but the principle is the same. So on Dinkytown, I come up here and I go to calculators, come down to tax, and so you can also calculate your tax return here, just to give you an idea, like an estimate. But what we need here is a payroll tax withholding calculator. So when I click on that, this system does the same thing that any other payroll system does. So what the HR person would do, um, I'm not going to spend time explaining the software again because this is not something you're going to need. I just wanted to show you the calculation that they used to come up with the amount that come out of your pay. So first thing, we're going to skip this first field here, leave it as 0. Select single because I'm single. We're looking at it from a single perspective. The person gets paid every 2 weeks, and we're not going to use any child credit for this one. We just want to keep it simple and straightforward. A single person, no wife, no kids. All right. We'll leave everything else for 0, and then you come down here. So what we're doing here, we're assuming that your annual salary is $48,500. We're going to take that, divide that by 26, and that's how the 26 weeks. And that's how I come up with the 1865. So that is your gross amount that you get every 2 weeks. Now that we know that, again, we're keeping things simple. So we set everything to 0. And the minute you type that in, the system calculates it for you. It says your net pay is 1566, and it takes out the Social Security, calculates that, calculates Medicare, and we will see all of this on your pay stub later, and it calculates the federal tax. It's that simple from a payroll perspective. All right, and the amount of taxes here, just to kind of give you a little bit more insight. So again, the idea for this video here is that you understand all the calculation work that come up with your paycheck. The IRS operate on an annual basis. So at the end of the year, they want to know how much money you make for the entire year. They use that to figure out your taxes, right? So with the payroll system, they do the same thing. They figure out how much money you would make for the entire year, use a table to figure out your taxes for the year, and then they divide that by 26 weeks. So let's see if this 156 here is correct. I'm going to go slow, so if you have a calculator, you can walk along with me. So your annual salary is $48,500. We're just going to assume that's what you're making, all right? Now, to come up with the biweekly pay, you take the $48,500 and you divide it by 26. So divide by 26. That gives you $1,865. That is your biweekly income. Now, what the IRS would do to come up with your taxes, they would take that $48,500 and they bring up the tax table. So here is my 1040 tax table here. And so we want the standard deduction because they're going to subtract, I'm sorry, wait. I need the 1040 form. That's the table. I need the actual form itself. So here's the actual form. Okay. So they come in here and they said, what is the standard deduction for a single person? This is a 2021 form. So it says 12,550. But I think for 2022, I looked it up already, so I kind of know that your standard deduction increased. The government give you a little bit more allowance. So we take 48,500 and we subtract 12,900. And what that leaves me with is 35,600. That is what is called the taxable income. So now that they know that, now that we have that, they come in and they go to the, where's my table? Where did my tax table go? This must be it. Yes. So they come in and they scroll down to the table. I'm looking for 35,600. So I'm going to scroll all the way down to the 3,500. Remember, what we're trying to do is to verify the tax amount that the software is calculating. So I come down and I'm looking for 35,600, which is right here. Okay. So when I scroll across this line, this column here is a single column. So it says for the year I owe $4,076. So I take that $4,076 in my calculator and I divide it by 26 weeks to come up with what my bi-weekly tax payment should be. That's the amount that they're going to take out of my paycheck. My calculator says it's $156.77. So now let's go back to the tax software and see what it says. And sure enough, $156. The rounding and stuff like that might be why the cents are different, but the main thing here is $156, which is kind of what I get. Okay, so that's what goes on behind the software here in terms of the calculation. All right, so the HR people have everything that they need to put into your pay stub to calculate what your take-home pay will be. So I have a copy of the pay stub here in my spreadsheet. So let's go step by step. So this is my bi-weekly pay. We want the Medicare. Let's see. I think this is correct, $27. So let me flip back to the software. Medicare, $27.04. Go back to the spreadsheet. We just round it to 27. Social Security. Let's see what the software says. Social Security is $115.63. They're probably going to round that up to $116. So we'll do that. So 116. And then we already said the taxes was $156. So we'll put that in. And that's how they come up with your deduction for your paycheck. So we have the federal tax and the other things that they take out of your pay. As we said earlier in the video, that there are other things that comes out of your pay. So this is what your pay stub would look like. Okay. Take out the Medicare, Social Security, and then the federal tax, and this gives you your total deduction, and then when you subtract the total deduction from your gross, then you get your net pay here. Okay, so that's kind of how that works. What I'll do later on is kind of do some explanation on what FICA is and so forth. But let's do this. So you see how it works for a single person. Let's flip and let's go change it for a single person with, let's do married. Okay, so we come back up here and we go back to the W-4 and we said, okay, we're assuming that you're married, so you're going to come down here and check off married, and we don't have any children yet. So that's it. You just check off that you're married, and you come down and you sign, and you hand that to HR. HR then take that information and boom, 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 and they get back over to the software. There's the software. And so what they're going to do is come in, change this to married, keep it every 2 weeks there. Your paycheck didn't change, and just by changing that, you can see that your net pay increase, and everything else stays the same except the taxes. The taxes is now $88.45. So they update your pay stub to $88. We'll just keep it at that in terms of rounding. You can see your take home more money, $1,632 and $34. Later on, let's see what happens if you're single and you have a child. No, let's do married. So now we see what it is when we're married. Later on, we have a child. Okay, so let's go calculate that. Go back to the website, and we said here, now we'll leave it at married and we have a child. As you can see, every time a life change, something happens, you have to come and update your W-4 form. So this line says, multiply the number of qualified children under 17 by 2,000. So we have 2,000 times 1 give us 2,000. And that's what we put here. That's it. Scroll down, sign, date, and you hand it to HR. HR then takes that, come back to the software, and says, okay, I'm married and I have a child on the 17, so they would put the 2,000 here. Okay, that's that. And the pay is the same, the gross, and you can see, voila. Now with the child, my pay increase to 17, because they take out less out of my paycheck. So now my take-home pay gone up to $1,700. And look at my taxes. It went down to $11. So they come to my pay stub and they change the federal tax, $11. And so now I take home $1,700 and something dollars. All right. So as you can see how the W-4 work as you manipulate it back and forth. And that's why it's important to understand how to fill it out and what it does. Okay. When you fill it out when you were single, if you didn't come back and update the form here that you've now been married and you have a child, then they're going to keep taking out that $156 out of your paycheck, and you keep going on with with $1,500 and something dollars. But you'll get it back at the end of the year, but then you'll have to wait 12 months if you start in January. That's why you want to come and update this. Okay, let's do one more. What if you're single? Okay, so single and you have a child. So it's just you and the child. So change it to single, leave the child there. That's that. We come down and we sign, date, and give it to HR. HR then takes it, go over to the software, and let's see what they do. So they change it to single, right? Every 2 weeks, the child is still there, so we'll leave it at that. Let's see what the software does. And so you can see it drops it down because you're no longer married, drops it down a little bit to $1,643, and now your taxes is $79. So they would come and they update the pay stub to $79. And there's my $1,600 and something dollars. It's better than when I was single with no child, no wife. Remember that the portal that I showed you, that some companies, they don't give you a W-4 form, they just send you into the portal and you just choose a number. Well, the reason why when you're married, it changes your paycheck so much to that $1,700 is because the number that would be assumed is the child would be one dependent, and the wife is another dependent. So that number would be 2 as opposed to 1. So that's why your paycheck goes up so much. when you're married and then have the child. All right. So um, I am going to now flip to my PowerPoint to kind of explain the pay stub. And then we wrap up because that is basically it. The main thing I wanted to show is how you manipulate the W-4, what it is, how you fill it out, and how you make changes. And as you make changes, how it's impacting your paycheck. And we're going to see in part 2 of my video how it impacts your tax return as well. Okay. All right, guys. Okay, let's talk about the pay stub. This is a basic, simple form of an example of a pay stub that I'm using here for this video. Usually, smaller business would use something like this, where it's pretty straightforward, easy to understand because they don't have a lot of stuff like retirement savings and 401k and so on that they're offering. So, without that, this is what you would see when you get your pay. Pretty straightforward, as opposed to the one that larger corporation use, which looks like this, a lot busier because they have, the retirement saving, the 401k, and that sort of thing. We're not going to describe everything on here because we don't have the time for this video. I just simply want you to understand that there's a difference between pay stub. Usually a larger firm will have a little bit more busier pay stub than this one. What's going on in this pay stub here? It will have the company name and the address, the employee ID, the employee name here, which is my name, my social security ID or social security number, employee ID here. And if you're getting paid by paper check, you will have the check number. This is the pay period. This is the pay date that you're getting paid. And then it will describe the income here, gross wages. In some pay stub, you'll see gross income, or it might just say gross. And I talk on this. Not every pay stub will have the rate and the hours, but I put it there and then the gross. I just simply take the gross, divide it by the 80 hours, and it comes up with the rate. And so down here, I circle these things to say that you have the year-to-date gross. The way you come up with that, you take the current period gross and you add it to the previous period and you get the year-to-date. You do the same thing with the total deductions. It's added up here to get the total, and then the current period deduction added to the previous. You get the year-to-date. Same thing for the net pay. Take the current net pay, add it to the previous net pay, you get the year-to-date. Over here, we have the gross pay, which is this, and then the total deduction, you subtract this, the total deduction from the gross, and you get the net pay. Let's talk about these things up here. As you can see, we're tracking the year-to-date deduction as a whole. Up here, it's broken out. So the FICA Medicare tax year-to-date is this, the Social Security is this, and then the federal income tax is this. Let's talk about what these are on the next slide. I am going to come over here, drag my video down here so it's not in the way. All right, so here we go. So Federal Insurance Contribution Act is an old law that was enacted right after the Great Depression here in America, around about 1935 to 1937, where the government said at that time that, okay, we have to provide for the retired person. So therefore, when you reach retirement age, you stop working, so you don't have an income. You will be on a fixed income at that time, but the government need to come up with a way to have the fund to pay you some type of fixed income so you can continue to live. So they said at that point, we will have the employer and the employee contribute to this fund. And that's what you're seeing here. It's in the form of Medicare and Social Security. On some pay stub, they'll combine them together where it says Medicare and Social Security. And in some other pay stub, You won't see either. You will just see OA SDI, which is Old Age Survivors and Disability Insurance. All right. And so I have a blurb down here that explains how they come up with the calculation, the amount calculated. They use some rates that the government put together. We saw that for the federal income tax that that rate is looked up on a table using the taxable income by HR, and they come up with the $79 here. For the rest, Social Security tax is 6.2% of the gross, which is $1,865. You multiply the two, and that's how you come up with the $116. And the same thing for the Medicare, 1.45%. You multiply the two, and you get the $27. And we saw that in the HR software that we showed, that it did all that calculation for you. So that's how the HR department come up with these numbers, these calculations to take out the taxes out of your paycheck, and then you go home with your net pay. All right, so that's, let me show you the other slide here, which just basically, it's some intuitive stuff. Fed mean federal, Fed taxes, federal income tax. And depending on the state you're in, some states have state income tax. So in the case of California, this would be California state income tax. I'm in Texas. We don't have state income tax here. So therefore, in my example, I didn't have it here. And the state disability insurance, some state may have that. I didn't think we have it here either, so I didn't use that here. So guys, that is a basic run through of the pay stub. To summarize, the purpose of this video was to give you a basic understanding behind how the calculation come about that goes into your tax return, and how to use the W-4 form to provide information to your employer so that they can figure out how much money to take out of your pay for taxes. All right, we saw how to fill it out, and that the information that you put on there determines what comes out of your paycheck and how it impacts your net pay that you go home with. You saw how we manipulate going from single to married and with child. As we change these, HR use that information to plug it into the payroll software that comes up with what needs to come out, and then you saw what you're left with on your pay stub. When you're married, less taxes come out of your paychecks, so you go home with more money. Then when you're married and have a child, it gets even better. Less taxes come out, and you go home with a bigger paycheck. Okay, I hope this video helps you to understand all of that. Drop me a note at the bottom if you feel that I went too fast, anything that you didn't understand that you need clarification on, if you needed to be discussed in a more clear way, I don't mind doing that. Don't forget to like, comments, share, and click the red button at the bottom to subscribe so that when new videos comes out, you'll be in the know, and to click the bell as well so you'll be notified. Guys, catch you in part 2 where we look at the W-2 form and look at the calculation that goes into the tax return. We will do the same thing. We'll do some manipulation so you see how those manipulations impact your tax return, and how all of that impacts the money that you take home for your pay as well. Until then, see you in part 2.